Anytime you're ready.
Perfect. Well, good evening, everyone. Welcome to SISIP Financial Series webinar. Today's focus is income tax basics, which is certainly a timely topic. I think everyone has had a chance to put in their level of income tax knowledge and the one point they want to cover today. Since we have a small group, I can probably take more questions than usual, so we can really get a lot of information out. New to Canadian taxes. Okay.
So Joanna is an American. Joanna, can you explain your nationality? American?
Yeah, I'm a U.S. citizen, but I married a Canadian Navyman.
Okay.
And now I'm a permanent resident of Canada who's also self-employed. So if we talk at all about self-employed, that's awesome.
Okay, we will cover one slide I think does talk about self-employment, but I'm happy to delve a little bit deeper just because we don't have a whole lot of people on the call, and if we can focus on some topics that you're interested in, I can certainly help you out there. Okay, so a little bit about me. I'm the financial planner at CFB Kingston. I've been with SISIP for about a year now. I bring about 12 years experience in financial services, specifically taxation, wealth, and estate planning. But I have made Kingston my new home. I'm formerly from Windsor. Okay, of course, most of you are probably aware that SISIP is a division of CFMWS, often located within the CanX Mall. Surprises me how many people don't know where SISIP is located. So chances are, where there's a CanX, there's a SISIP. At SISIP, we exist to serve the CAF community, current Reg Force, reservists, release members, and their family. Our vision is that all members of the CAF community have financial health and security. Our commitment to financial health leads into the topic which we're going to cover tonight, which is income tax basics. It's really important to be aware of where your money is going, particularly with income taxes, to take advantage of some of the deductions that you might be entitled to. So this presentation today is going to cover some basic facts about taxes. So what is considered taxable income, how different types of income are taxed. We'll go over some standard deductions and tax credits that might reduce the taxes that you pay, and how TFSAs and RSPs can help you reduce your taxes, and also how to file your taxes and avoid problems with your tax returns.
What's the TFSA?
A tax-free savings account.
Oh, right, of course.
Okay, so this section is going to cover essentially how much taxes you pay, what they pay for, the most common types of taxes, and your rights and responsibilities as a taxpayer. In Canada, we have a self-assessment system. In other countries, interestingly enough, some governments will send a tax bill to their taxpayers and indicate this is how much taxes you pay. Where in Canada, it's a self-assessment, so we actually complete a tax return, and then we are responsible for filing the tax return by the deadline and paying the correct amount of taxes. So you do have rights under the Taxpayer Bill of Rights, and you also have the Ombudsman that provides independent review if you have any questions regarding your tax return, or if you don't feel that it was assessed fairly. These are the different sources of taxes.
Here, let's do something fun here, if it's okay, Bonnie, with you. So grab your pointers on the top left-hand side of the screen. And what do you think is the biggest revenue source? Is it income taxes, sales taxes? What types of taxes do you think, or health services or other taxes? What gives the government the biggest revenue source? Just use your pointer and take a wild guess. Joanna and Kim.
Oh, too easy.
Ah, very good. Oh, they've got this.
You're right. So most of the revenue is derived from income taxes. That's their biggest source. Okay, some key messages. Residents of Canada pay several different taxes. Taxes paid for public programs and services. As a taxpayer, you have the right to understand the taxation system, pay no more tax than the laws have authorized, and fair treatment. As I mentioned, you do have to report your income and pay your taxes accurately, honestly, and on time. So if you could, put in the chat, what is the filing deadline? For Canadian taxes.
Okay, and what would you say the filing deadline is? We have an April 15th. Any other dates? Wait, that's U.S.
That's right.
April 30th, says Kim. April 31st, says Joanna. She wants a redo.
So it is April 30th. However, April 30th this year lands on a Saturday. So we actually get till Monday, which is May 2nd. So a few more days to procrastinate.
That's not good.
No.
Hi, Allison.
Hi.
Great. Nice to have you here. We're just going through. We just started.
Perfect.
Thanks for joining. So in Canada, we have a progressive tax system. The more income you have, the more taxes you pay. Okay, in this section, we're going to cover how the income tax system treats different forms of income differently and how taxing investments differs from taxing employment income, and also some tax-free forms of income.
Can I just ask one thing? Who's on the telephone?
Allison.
Is that Allison on the telephone?
Yes, it is.
No.
I couldn't. It wasn't letting me go online and connect, so I had to call it instead.
I'm going to put my phone number in the chat. If you can give me a call, I'm going to ask you to, and I'll walk you through how to join using the computer. Okay? So
okay.
here's my number in the chat. 204.
I tried 6 times to join using the computer. It just keeps downloading it and doesn't then take me any further. So.
Okay. Thank you.
Oh, that's not for me.
Okay, so in the Canadian income tax system, governments collect tax when the income is above the minimum amount. So the minimum amount changes every year. This year it's $11,327, which means if you earn more than that amount, you will pay taxes. That's often why students don't pay taxes, because they typically don't earn more than $11,000. Okay, you also pay federal and provincial taxes. With all provinces, with the exception of Quebec, you will file one tax return. In Quebec, you will file a Quebec tax return and a federal tax return separately because they have their own tax collection system. Okay, employment income. This is all money and benefits that are earned while working for an employer. So your employer will collect all the taxes at source, remit them to the CRA, Canada Revenue Agency, and then issue you a T4 slip, and that's what you use to file your tax return. It's important for military members to understand that employment insurance and disability benefits are taxed as income, as is Brookfield payments.
I have a question.
Sure.
You were saying on the last slide there that the cap is $11,327.
Correct.
Now, I know I'm allowed to transfer some money to my wife so I can pay a less income tax deductible.
Yep.
Now, she made $8,000 last year because she worked at the MFRC in North Bay, Ontario.
Okay.
So if she made $8,000, does that mean I can only transfer roughly $3,000 to her before she can pay tax?
Okay, so the basic personal amount, you're right. If she didn't earn an income, you would get to claim her as you'd use her spousal amount, which is equivalent to the $11,327. If she earned $8,000, that means you would get the difference to be able to use the deduction.
Okay, perfect. Thank you.
Okay, you're welcome. Okay, income from self-employment. It's very different from employment income in the fact that you, as being self-employed, having a business, you will report your income and your expenses. This is a very efficient form of income, meaning that you can use a variety of deductions to decrease your income. Of course, it needs to be the expenses that are incurred as a result of running the business. But it's also important to keep in mind that although you're self-employed, every Canadian does need to pay into CPP from their employment earnings. For a self-employed individual, they're required to pay both the employer and the employee portion. So you'll notice if you are employed, you do contribute to Canada Pension Plan at 4.95% of your income, whereas your employer also contributes that amount. If you're self-employed, you're paying 4.95% times 2. Okay, and usually if you are owing, you will need to send tax installments quarterly or monthly on your self-employed earnings.
Does that answer some of your questions, Joanna?
I just wish I would have known about the CPP a year ago.
Yeah.
Nobody told me.
Yeah, you know, sometimes it comes at a bad time when you're going to file and you're owing. But if you think of your future when you do start to collect CPP, you'll be happy that you paid into it. But it's definitely a shocker if you weren't aware of it ahead of time. Sometimes your deductions can help bring your tax balance to zero, but quite often that CPP balance is still due.
Yeah, you know, what's unfortunate is, and this is what I was thinking about the other day as I was mulling this over, is that for self-employed, for somebody who's self-employed as a contractor, I don't go anywhere, I don't use my car, I work out of my little home office that's just really small. Yeah. And so my deductions are so minimal, it doesn't even offset it by a couple $100.
So even the internet that you use, the cell phone bills, that sort of thing, doesn't help?
All of that works out to less than $1,000 total in a year.
Oh,
so
really?
It's like, so for those of you who, so for those of us who are self-employment isn't something that allows you a lot of deductions, you sort of get screwed because of that huge CPP.
Yeah.
Yeah. But anyway, it's a side note.
Yeah, definitely.
What about the
consider.
cost for your office, Joanna? The room that it takes from your house, doesn't that a deduction as well?
So you can claim. So basically you take your square footage, and what you can claim for that is a portion of your mortgage interest and a portion of your heating and electric. But again, mine is so my office is so small. And you can only claim that portion, a percentage of the week, right? Because you don't work in that office every day, 24 hours a day. You only work there 5 days a week, so many hours, and you have to include that calculation when you're claiming. And so it really takes it down to just pennies a day, honestly, at the end of the day.
Yeah, depending on the space, absolutely.
But yeah, it's all good information. So.
Any other questions about self-employment? Okay. So we'll review the investment income. So interest income, the entire amount is taxable. So dollar for dollar, if you earn $50 of interest, you're paying your marginal tax rate on that income. Rental income, it's similar to a business where you're going to claim deductions against the income that you earned, and that's on a T766.
Daddy, what does you look for?
Okay. And then dividends, these are profits from companies, either that you own or that you're invested in. And this is on a separate report. There is a gross up. It's a bit complicated, so I won't go through it, but the corporation essentially pays a higher tax bracket on the profits, and then it's adjusted to your marginal tax rate. Okay, and then profits from sales of property. It's important to understand that your principal residence is exempt from that. However, if you have a cottage, that is sale of a property that would need to be disclosed on a tax return. And if you did make some money off of the sale, it is considered a capital gain, and 50% of that gain is taxable when you sell it. Okay, pension and other income. Most pension and other income is taxable. However, there is an age or disability exemption that protects some income. So, for example, if you are over 65, you can claim the age amount, which is right now $7,033. And pension amount, you can claim the first $2,000. There's a credit for that as well.
And so where do we find the amounts? It's all on the tax forms?
Exactly. It's all on your tax forms. If you are using a software, a lot of software is very user-friendly nowadays. It's essentially a questionnaire that will ask you a variety of questions and how it relates to the Income Tax Act. So it'll say, what's your age? You put it in, they know that you're a senior if it's based on your age. Do you have a spouse? Do you have pension income? And it will say, do you want to do pension splitting? And that might be a benefit to you as well. Pension splitting is where you can split up to 50% of your pension income with your spouse to take advantage of their lower tax bracket. Okay, there's some social benefits that are tax-free. So for example, the HST GST credit, guaranteed income supplement for seniors, as well as the child tax benefit. Okay, on the next slide, this is an example of our progressive tax brackets. So this goes in the same theory with the more income you earn, the more taxes you pay. I'm going to flip to share my screen so you can see the link if you want to access it later.
So Bonnie is sharing her screen. If you want to continue to chat, bring your mouse right up to the middle of your screen and a tab will come down and you can press on Participant and then Chat Panel. And this way you can continue to chat. Please give me a green check when when you're able to see your participant. There you go. Good. I see Allison's there. Good job. And just when you're able to find it, just bring your mouse right up to the top and you'll see the participant panel as well.
Sorry, I had a question.
Go ahead.
The child tax benefit, I tried to ask you, but I was muted here. I think I muted myself by accident. Yeah. My wife, would she declare that as the low spouse, like low earning?
She would not declare the child tax benefit. It doesn't go on the tax return. What I think you might be referring to is the UCCB amount, which is the Universal Child Care Benefit. Okay. And that would go on the lower income earner.
Okay.
Okay, so there are some changes with regards to tax brackets. So for the following year, this 22% tax bracket has been changed to 20.5%, and there's another tax bracket that has been added. So there's a fifth tax bracket that will tax the highest income earners over $200,000 at 33%. Okay, just some information about average and marginal tax rates. You often find that I will refer to marginal tax rate, and to me that's the most important one because that's what taxes you pay when you earn more money. So if you earned $1 more, that is the tax rate that you'll be paying. Whereas the average tax rate is your total taxes paid divided by your total income. Marginal tax rate is also the way that you would calculate how much of an RSP refund you would get. So for example, if your marginal tax rate was 36%, 32%, then your RSP contribution, you'd multiply that by the percentage, and that would be the approximate equivalent refund. Okay, just a quick summary. Different types of income can be taxed at a different rate, or some are even tax-free. You pay income tax on your taxable income minus your total income minus allowable deductions or exemptions. Under a graduated income tax system, people with lower income pay a lower tax rate. Okay, and of course, contributing to your RSP reduces your taxes, which is a segue into the next section. We'll talk about how you can reduce some of your taxes. Amounts that people in certain groups can deduct from the income they report, how registered savings plans can help you protect income from taxation, various credits that you can use to reduce the taxes that you would otherwise have to pay. Okay, income tax is based on taxable income, not total income. Deductions are amounts subtracted from total income. You can claim deductions to lower your taxable income, which then reduces your tax payable. Okay, a lower taxable income is also used to calculate certain benefits like child tax benefit. So if you have a lower taxable income, this would increase your benefits. Okay, these are some key deductions. I hope you guys can
Bonnie,
see.
did you want to use your arrow to point to the key deductions as you're speaking to them?
Yeah, that's a good idea. Okay. So if you see this line here, this is the pension splitting amount. I don't know if there's any pensioners on the call today, but that is one of the best tools for reducing taxable income. It allows you to split your pension with your spouse if they are at a lower tax rate. Okay, then union dues or professional dues. So if you're part of any association, as long as you have a receipt indicating that it's a professional due or a union due, you can claim that against your income. Child care expenses is another big one. So if you pay to have someone watch your child while you earn an income or go to school, you can claim the expense. Okay, moving expenses is also another big one, although most military do benefit from an allowance. So for the most part, they will not be able to claim any moving expenses, with the exception if they incurred additional expenses that were not reimbursed. But it's important to keep all of the expenses outlined very clearly because you will definitely be asked if you make this claim. Okay, another deduction is support payments made. So this is spousal support. So if you pay spousal support, you are entitled to a deduction as long as you have a court order and receipts indicating that you have made these payments. And it's a monthly payment, quarterly payment, but it's regular. You can claim that against your income. Before 1996, you were able to claim child support as a deduction. That has now changed. But if you have a court order before 1996, that allows you to deduct child support. Okay, so another deduction that's not on here, it's actually in a different section, but I do want to bring attention, is if you are entitled on your T4, you have a box 43 that indicates military personnel. That means that you are enabled to claim that amount of income tax-free because you were overseas or on a mission. The government would indicate that on your T4 slip. So I know we've had a lot of questions in the past that some military members weren't sure if they could claim a certain portion of their income tax-free or not. And sometimes that doesn't happen, that decision doesn't happen right away. But if it's, the decision is made that they can claim it, then they will be issued an amended T4 where they would then file what's called a T1 adjustment to have that portion of income to be considered tax-free, and the additional refunds would then be sent to you by the government. But it's something that you do need to apply for once you have an amended T4 slip. Any questions about some of the key deductions? Okay. Some additional savings with regards to taxes by using a registered retirement savings plan. So not only does this defer the income tax on the deposit, but the deposit that you make is then tax sheltered.
Excuse me, Bonnie. Johnny,
yeah.
Joanna had a question.
Sure.
I'll get to it at the end of this slide because it had to do with RRSP, so I'll just wait until she finishes this slide and then come back.
Perfect. Okay, so the way that RSP contribution limits are calculated is 18% of your employment income minus any pension adjustment. So for most military members, that results in very little contribution room year after year. And then they're subject to, of course, a limit of $24,930 for 2015. That amount increases every year. Okay, an RSP can include the most common types of investments. Essentially, an RRSP is just a tax shelter. And if you do make the contribution, you get a deduction on your tax return equivalent to your marginal tax rate. If you withdraw the money, you do have to pay taxes. So I guess the concept is to defer the income to a time where your tax rate is going to be lower. And this is often in retirement. This may or may not be the case for a military member, so it's important to talk to a financial planner to determine what your situation might be, so you can, I guess, plan ahead of time. There are some exceptions to withdrawals. There is a home buyer's plan where you can essentially borrow from your own RSP. You do have to repay back into the RSP, but you do have 15 years to do so. So if you withdrew $10,000, it would be tax-free. There's no taxable income there. You're just borrowing from yourself, and you would repay 1/10 or 1/15 over the course of 15 years. If you do not contribute that required 1/15 of the payment, that 1/15 is considered income for the year that you did not pay. The other option is a lifelong learning plan. Same concept as the home buyer's plan. You're borrowing from your own RSP to fund a post-secondary education, and you have 10 years to repay. Okay, tax-free savings. Oh, did you want to ask the question about the RSP before I move forward?
Yes, ma'am. So as a self-employed person then, would it behoove me to, rather than pay all this money in taxes every year, to take most of that money, put it into RRSP so that my tax amount is less?
That's not an easy answer because it really does depend. What is your income going to look like in retirement? And do you want to defer the taxes to a time when you potentially could be paying higher? Sometimes business owners will have higher income later on in life as opposed to now. So I guess that's the deciding factor, but you're absolutely right. You could wipe out your tax bill to zero by making an RSP contribution. It's when do you want to pay the taxes on it, because at some point you may be paying more taxes, especially if you have a business that you could sell at some point, and that will be taxable income as well.
We wish, huh, Margaret? Okay, cool. Thank you.
You're welcome. Okay, tax-free savings account. I thought it was important to include this because this is, I guess, not a very new concept, but there's been a lot of changes. So I just wanted to touch upon a TFSA. If you could raise your hand if you can tell me what is a tax-free savings account.
So to raise your hand, it's on the right-hand side of your screen underneath all the names, and it's an, Allison.
What I do?
Allison Collins.
Yeah. Can you hear me?
Yes, we can.
Okay. You want me to answer the question?
Yes, please.
So basically, it's just, it was a deposit scheme that was introduced by the government a few years ago to enable you to save money on an annual basis up to a maximum allowance, and you can withdraw from it and not lose the allowance on a year-by-year basis. So, for example, I think the total over the period of time is about $45,000 or something. So you're actually allowed to cumulatively add on to it every year, as long as you don't deposit more in 1 year than you're allowed to. And it's all
Excellent.
tax. You have to declare it on your tax return.
Well
Sorry,
done.
Did you say you don't have to declare, or you do?
You don't.
Excellent. You're absolutely
So
right.
your financial provider, the company that you have your TFSA registered with, they make the declaration on your behalf to the to CRA, and you can actually go in and look at your own contributions and allowances on your CRA account.
Excellent. So you're absolutely correct. The cumulative room right now is 46,500. So some of you may remember the limit last year was 10,000. It's now 5,500. So the cumulative, assuming you were 18 since 2009, you have the cumulative room of 46,500. So it's important to note that this is after-tax dollars. So you're not getting a deduction, but anything you earn within the TFSA is tax-free. And also, when you look at your RSP, the same sort of investments are available with the TFSA as well. Okay, additional tax savings is through an RESP. Mainly, it is a tax sheltering, so there's no deductions, but it's for a post-secondary education for your child. So similar investments can be made within this sheltered plan, and they're only taxed when they're pulled out. So, and typically that's at the hands of the child. And the government does match 20% to your contributions. Different provinces also have additional grants, but the federal is at 20%.
Any questions on that, the RESPs? I learned today that you're allowed to use you're allowed to do these RESPs for grandchildren as well, right?
Yep. Okay, there's also a registered disability savings plan. So if you have a family member or yourself has a disability, you need to have a disability tax credit on file with the government to be able to open this sort of plan. This is actually a wonderful plan. Any contributions into this plan are not tax deductible, but they are sheltered in the same way that an RESP does. The biggest part of the RDSP is that the contributions are matched by the government by 300%. So for every dollar, they're going to put in 3, depending on your income. And for lower income, they'll actually put in a certain amount, regardless if you make any contributions. So again, when the income is withdrawn from the account, that's when it's taxed, and typically it's with a disabled person who doesn't have income or has limited income, so it would then be lower tax rate. Okay, but they need to have a disability tax credit on file, which is a T2201. Okay, some refundable tax credits. These are amounts that are paid to you if you qualify. They include the child tax benefit, GST tax credit, and the working income tax credit. So the working income tax credit is something that you might qualify for if you are employed and your income is below a certain threshold. Okay, any of these benefits would be reduced based on your taxable income and also that of your spouse. Okay, non-refundable tax credits, they reduce the taxes payable. So essentially, you would calculate all the tax credits that you have available, subtract the allowable percentage from each of the taxable income, and then arrive at how much taxes you have to pay. Okay, so it essentially just decreases the taxes payable for you. Okay, this is a listing of the credits here. Let me use my pointer. The biggest change for this year is the family caregiver amount. If you had children that were underage, typically you probably claimed a child amount. This year, that's not available, so that's on the credit. A family caregiver amount is for a child that's under age 18 that has a disability. So that's been replaced with the child amount, so that's no longer available. Okay, public transit amount. If you're a commuter and you take via rail even, or if you live in Toronto and you take the transit, all that is deductible as long as you're on a commuter path. Okay, children's art amount.
What kind of receipt do you need to show that?
It would be the receipt that you purchased. It would outline, or even some municipalities have a transit bus pass that's issued for each month. As long as it shows the amount, then you can claim those. You just keep the copies. Okay, the children's art amount. If you have children, you probably remember the fitness tax credit. That's here too. It's just on a different slot. It's on a different screen now. Those are still eligible to be claimed, but I do want to warn everyone that you need to make sure that the receipt that you have does indicate all the information, which child the receipt is made out for, the company that issued the receipt, for how much, how long the program is, and the date. Quite often the receipts are very quick, and they're being declined by CRA, which then results in taxes payable. So you just want to make sure you have the right receipt because you may be asked for it at some point.
I'm sorry, what information do you need there?
So with the children's art or the tax credit, fitness tax credit, you want to make sure the child's name is on the actual receipt. Okay, the program in which they were in, make sure you have a listing of how long the program was. Some programs don't qualify. I find that if you do the program online, it lists in the email exactly what you paid for. So you want to know the year, the timeline, the organization that they were involved in, and the correct tax year.
Okay, thank you.
Okay, and I also want to note that whoever paid for the sports or the ORIC classes, if the receipt is in that person's name, that person can claim. So in the case where you have a family that is separated and maybe both contribute to sports or fitness for the child, even though maybe the father does not claim eligible dependent for that son, they can still claim the fitness and the art amount for them. Okay, the next item is the home buyer's amount. This is if you're a first-time home buyer. It's a one-time credit, so if you bought a house in 2015, you can claim a credit for that. You just need the purchase agreement in case CRA needs to see it. Okay, this is a pension income amount. So if you collected a pension, then you get a tax credit automatically of $2,000. As well, if you are splitting pension income, that person who is having the pension they can split with them is also eligible for that $2,000 credit. Okay, and the next three lines are with regards to caregiver amount and disability amount. So again, if you have a disability tax credit, you can claim those items. Interest paid on your student loan. Any kind of federal student loan is eligible. A student line of credit is not eligible. If you paid tuition to attend a college or post-secondary school, as long as they issued what's called a T-2202A, you may be able to claim the tuition, education, and textbook amount. And that tuition amount would be listed right on the slip. And then the education and textbook amount is a flat rate of $465 for each month that you were a full-time student. Okay, and that same information can be transferred from a child to yourself. up to $5,000. And the same is also true with a spouse. Any questions about some of the non-refundable tax credits?
Now this line you're on right now,
yeah,
326. I think that was going to answer my question from the 11,000 to what she made. That's where I would put it.
326. A bit blurry.
Amounts transferred from your spouse or common law partner.
No, it would actually be a line right here.
Right here.
Spouse or common law partner amount.
303. Okay.
Yeah.
Okay. Thank
yeah.
you.
If she was transferring anything else to you, tuition or a disability amount, then that would go on that the 326.
And Joanna had a question?
Yes, ma'am. A couple questions. So our son turned 18 in November and lives at home. Can I still claim him as my dependent?
No, unfortunately.
So for the entire year up until November, he was a dependent, but because he turned 18 prior to December 31st, I can't claim him for any of the year?
Okay, sorry. Are you claiming eligible dependent, you mean?
I guess so, yeah, like he get...
Okay. Do you have a spouse?
Yes.
Okay, so you wouldn't be able to claim an eligible dependent because you have a spouse. You would have normally been able to claim a child amount if the child was 16 and under, but if they're over 16, there isn't any additional credit that you can claim.
So there's not like the basic personal amount for a dependent?
No.
Okay.
Yeah.
I thought last year we claimed him and he was 17, so.
You may have claimed a child amount because he would have been 16 at some point in the year or 17 in the year, but that has been removed from the tax system, and now the family caregiver amount has been replaced.
Oh.
Yeah, I think that's going to be a big one for a lot of people because it was a $2,500 credit.
Yeah.
Yeah. We've gotten rid of that.
This year's taxes keep getting better and better for me.
I'm the bearer of bad news.
And then one last question. This is sort of about the provincial. So when we get posted to Quebec this summer, when we do taxes next year, even though we spent half of the year in BC, we will get taxed as if we'd spent the whole year in Quebec?
Unfortunately, this is, unfortunately, it's a problem. If you could, I know you have no control, but to be able to start the year in Quebec is the most ideal just because their tax bracket, their provincial tax is so much higher. Unfortunately, yeah, you probably will be paying a significant amount of taxes.
Right, this is where my love for Canada starts to wane, because in the States, you just file two separate ones, right?
Yeah.
If I lived in Ohio one portion of the year and Washington the other portion of the year, I would just file two sets of taxes so that I wasn't having to get dinged too far at the end. But, okay, all right, thank you.
You will also have to file a Quebec tax return, which is completely separate than the federal tax return. So keep that in mind for the filing tax year. Any other questions before I move on?
Allison has a question. Allison Collins.
Yeah, just staying with the Quebec issue, this was something that I came across for this year's taxes. We were living in Ontario, but my husband was working in Quebec. So they changed the way the tax was done last year. So for the first time ever, we received I think it's an R1 form.
Yeah, a Releve 1. Mm-hmm.
Yes, that's it. But I don't have to fill a Quebec tax return as well for him, do I? I just have to fill the Ontario one? Exactly,
but you want to make sure that you are claiming the Quebec taxes that he did pay on his Releve 1. Because he's paying more taxes than he should. But because he's based in Ontario, he will get a refund of that. Yeah, it was a bit of a shock until I actually entered the details from the tax return, and then it all came down again. So yeah, exactly. Okay. As long as you're in Ontario, you're okay. If you move on the other side, then you'll be paying that full amount, unfortunately.
I don't know if Joanna needs to be aware of that. I don't know if you're going to Quebec City or if you're going to Gatineau, but that's just something to be aware of. If you're right on the border and you live in Ontario, then the tax situation is slightly different.
Yeah, it's where what province you resided as of December 31st.
Okay, thank you.
You're welcome. Okay, and this is essentially how you calculate what you owe or what you get back. So all the taxes that are deducted from your employer are calculated here. Any CPP overpayment, if you paid more than you should with EI, employment insurance, that it's all calculated, and then what you owe or have a refund at the bottom here. So if you do your taxes manually, this is what it will look like. If you do your taxes online with software, it probably will not look this way. It'll just say refund or balance owing. But this is essentially how it's all calculated. Okay, and this is the tax summary, and these are all the line items that are composed for the federal tax return.
So what is the tax summary? Do you fill this in as well?
No, this is part of our software. It's just so we can see all the line items. So if you see here where it says total income, all line 100s are results of income, and then line 200 are all net income, so deductions against your income. And you'll see here, this is Canadian Forces personnel. That's where box 43 would be. Okay, and then box 300 is non-refundable tax credit, and then where your total taxes payable is the 400. So they're identified by their line numbers, usually only identified by tax nerds like myself. Okay, just a quick summary of the key messages from the past couple slides. There's a lot of deductions and tax credits that you might be eligible for, so it's important to spend a little bit of time researching and talking to a professional to find out what you might be eligible for. I find that the federal website, even provincial website, CRA's website, is a good source of information. They're very user-friendly. You can find some deductions maybe that you think you might be entitled to, and they will provide criteria in which you can determine if you're eligible. Okay, tax deductions and credits vary as a family, and financial circumstances change. So what you might be eligible for, the next person may not be, because it's entirely based on your family income. Okay, and as I mentioned, check the income tax guide. I know quite often they have them at the post office or at Shoppers. You can always get the tax guide if you prefer to do it by hand. If not, there's a lot of software.
And every year the deductions change, right?
Absolutely.
Yeah.
Yeah. And it's important to file on time to avoid any penalties and interest that are charged for any amounts that you have outstanding. So if you have a refund coming, you typically have a refund. If you file after April 30th, there won't be any consequences unless you pass July, that any government benefits that you were a recipient of, they will stop. So you need to make sure you file just to get those credits and those provincial or federal benefits going. Okay, if you are in a position where you're owing and you file after the deadline, there will be a penalty, which is 5%, and then interest per month, which is 1%. So it's in your best interest to get this all done ahead of time. You don't want to be surprised that you owe and it's May 5th. Okay, this section is going to provide some information about filing your taxes, how to keep it organized, some tips to avoid problems with tax agency, how to make use of expert tax services, and some potential tax fraud that you have to be aware of. Okay, getting organized. It's always a good idea to set up a family tax file, whether it's in a credenza or a small filing cabinet or even one of those accordion files that you keep somewhere. If you can identify it by previous tax returns, current tax return, and if you are self-employed, keep that separate so you can itemize some of your expenses. I found that most members will benefit from having a section that has income and then receipts for deductible expenses. So for example, kids, and then you can put all the child care expenses and all of the deductions that you might be eligible for in that file. Because what you receive January 1, probably in March of the following year, you won't remember where you put it if it's just in that kitchen cabinet. So it's important to kind of identify and have a system set up. That way you can make use of all the deductions that you're able to. Okay, penalties and audits. I mentioned April 30th of each year. There's penalties plus interest. Again, you still need to claim a tax return even if you don't have any taxes due or a refund. If you're in a position where you are owing and there's a considerable amount of interest that is accumulating on the balance owing, you can request a relief if there's reasons beyond your control. Okay, and it's important to keep your tax records on file for at least 7 years. The Canada Revenue Agency could actually say, I would like to see your 2008 slips, and you need to be able to provide them. Otherwise, they could say you're not going to be able to claim that if you can't produce the documentation. Okay, some red flag audits based on my experience. The most frequent types of audits will happen when you claim moving expenses. Moving expenses will always be flagged, and what will happen is CRA will simply ask in a very lengthy letter to see the documentation to support your claim. Okay, spousal support is always one that will be flagged. Eligible dependent, off and on, will be asked for, so you just need to be able to provide the documentation. For eligible dependent, you essentially need to provide a custody agreement showing that the child is in your care, and usually that's sufficient. If you are father who has an eligible dependent living at home, unfortunately there's a few other documents that you need to provide, the court order, and sometimes you need to get a letter from the child's school or a physician indicating that you are listed as a primary caregiver. Okay, sometimes tuition claims are flagged, simply need to provide the right documentation, but again, CRA will often ask for it. If you got a transfer from your spouse or from your child for their tuition, they will ask for that. You need to make sure that on that tuition form, the T2202A, the child or your spouse needs to sign off that they agree to transfer the amount to you. If they don't sign that, CRA will not allow you to claim it. Okay, from time to time, you may receive a pre or post assessment review notice. It will be lengthy, maybe in some language that you may or may not understand. Simply, they're just asking to see the documentation to support the claim. And usually there's a code on the letter that you go onto CRA's website and it will spit out and tell you exactly what documentation you need to support your claim. Okay, usually it's followed by a schedule, which is found in the tax software. If you're ever unsure, you can always ask the software provider, or if you know a tax professional, even at the SISIP office, we can always help you out and give you some idea of what sort of documentation you need. Any questions on flagged audits at all? Okay, fraud prevention. There's a lot of tax-deductible charities out there that are fraudulent, so it's important before you donate to check CRA's website for a list of registered charities. There's also a lot of fake emails claiming to be a tax agency. I recall recently there was one that said you have a balance owing, you need to pay right away, click this and enter your personal information. CRA will not request personal information by email or phone. So
I get that every year.
Do you really?
I swear to God I do.
Yeah.
I'm the slow one that calls and says, okay, what's going on?
Yeah.
Get it a lot.
But you do report it though?
Yeah, I call
okay,
them,
good.
tell them that this is what happened, and then they ask who it's from and
yeah,
a bunch of questions. But
you know, they've gotten quite creative. I've seen some of the fake emails, and it's shocking. It looks like it's from CRA. So if you're ever unsure, it's best just to call CRA just to confirm the information that you've received is valid. Any records of contact will be on their system, and likely if it's come via email, it's not legitimate.
yeah, it only comes through mail.
Yeah. Okay, there are several electronic tax packages that are through the grocery store, Best Buy, online. CRA even has a list of free software. I'll flip my screen. You can see from the SISIP website, there is a link to the software. Okay, so right on the main page under Learning Center, CRA free tax software is indicated there. So you click the link, it will take you to this link here, which is all the software that's available, and you can use whatever is suitable for you. Okay.
Bonnie,
Yes.
can anybody use that software package, or do you have to put in a code just to show that you're military?
No, all the software there is available free. However, I know the H&R Block, who has partnered with SISIP to provide military members with a free tax return that you can do online. So I don't know if SISIP has included that link yet, because this is very new. We just learned about it last week, but from what I understand is they're offering that to military members.
Okay, and Allison Steed, do you have a question?
Yeah, H&R Block, I was actually on there yesterday. H&R Block will only offer, you need your service number, whoever's in the military,
Okay.
To order it, and it's free, but it only works for Microsoft. I have Apple.
Oh, really?
It does not work at all. It also does not work for deemed resident status, which I am.
Okay.
So that's one of my questions at the end of this, but.
Okay, so there's some exceptions to that.
Yeah, it does work. I was in Ontario for 7 or 8 years, and it works really good for them. But deemed resident status in the States, or if you're in, Europe or something along that line, it won't work.
Okay, so deemed residents, Microsoft Computer. Okay.
Yeah, it will not work for Apple. And I've also called them. I called the 1-800 number, and they do not offer for Apple yet. Those things are going to be offering next year.
Okay, good to know. Thank you. Okay, so if you prepare for your taxes in advance, this avoids penalties for late filing, helps you to organize to minimize the taxes. If you can use a system to organize a tax document throughout the year, this process will be so much easier than scrambling to find things, and also to avoid missed deductions. And a lot of the software, as I mentioned, is quite user-friendly. It's an interview-type questionnaire to help you navigate certain deductions that you might be entitled to. So saving money is financial freedom, and at SISIP, we can help you get there. I'm not sure if everyone is aware, but we do have a new cash savings plan, and this is a pay allotment. You can do an RSP this way. It's pretty straightforward. Takes 15 minutes to set up, and it, like I said, pay allotment. A lot of different options, TFSA and non-registered as well.
Okay, sorry, I have one more question here. I missed that a little bit. I'm just reading your slide here.
Yep.
So SISIP now will offer an RRSP contribution from a pay allotment.
Exactly.
Will you do that this year?
Absolutely. So a cash savings plan is a new plan that we've launched. I believe it was in January of last year, just to make it easier for members to save. It's a pay allotment. You can indicate the minimum requirement, I think, is $25 a month. So you can indicate how much you want to save, and it will save bi-monthly. And then, of course, because it's part of a group plan, you get the benefit of lower management expense fees than you would on a typical mutual fund because it's part of a group, as well as you have access to portfolio managers that are only for group plans. So there's a lot of benefits, but you can do a tax-free savings account and an RSP as well.
Okay, and the RRSP contributions, it's not going to go to, say, my personal bank. It's going to go to who's on your slide here, London Life Segregated Funds?
Exactly. It goes into a group plan, so it's all managed by you online. So the money is taken from your pay and then deposited to London Life, who is the provider of the group plan. And then the different investment selections, you have a lot of different choices based on your risk tolerance. You basically fill out a questionnaire to determine how comfortable you are with risks, and then essentially indicate that. And it's pretty simple. It's about 15 minutes. And then you access everything online.
How would I start this process then?
So you would go to the SISIP website, or you could also visit a SISIP office and they could help you out. And then there should be a link on there that allows you to access the CAF Savings Fund and enroll online. It's with Great West Life, so you'd have to have the plan ID number, which I believe is on the SISIP website.
Okay. Thank you.
You're welcome. Okay, so these are our other financial solutions. So we recently launched the SISIP travel insurance, as well as the personal, which is a home and auto. We don't actually do this at the office, but it's online. You give a phone call and they can give you a quote. I've used the travel insurance myself for a family member, and SISIP members or CAF members receive 10% off the discounted rate. So it's fairly competitive. Manulife is our insurance provider, and as well BMO is our community defense banking. The CAF Savings Plan recently launched, and Fundex is the mutual fund platform. That's what the financial planners would use at the office. And Manulife Bank is who provides our GICs.
I just want to note that the personal or car insurance is fantastic for military members and their family members.
Oh, good. You have some good experience?
$2,000 a year with the personal.
Oh, good. Good to hear.
I have a question too, Bonnie.
Sure.
Yeah, so does that not work, though, if you're in a province that requires government-run insurance, like here in BC, it's ICBC?
That's a good question. I'm not sure, to be honest with you. I think that might be a problem for you, but you can always give them a call and find out. I'm in Ontario, so I'm not really familiar.
Yes, Joanna, in Manitoba, we have Manitoba insurance, and we have everybody uses that insurance for their car.
Okay, so probably the same here. Okay, just wondering. Thanks.
Yeah.
The personal insurance is Canada-wide.
Is it? Okay.
Yeah, it's fantastic. I was out in British Columbia, I had it there, and then I was in Ontario for 7 or 8 years, and the personal saved me a ton of money.
Oh, good.
Now, one other thing that I just wanted to add, speaking of saving a ton of money, is give me a green check if you're familiar with the CF1 appreciation card, and if you have one. Okay, so we're doing a session on the CF1 coming up next week, actually next Tuesday. Phenomenal money savings there, thousands of dollars in savings. So keep your eye out for that session.
I have the CF1 card, but can I use it out in the States?
I believe there are some places in the States that yes, there are. Great. Okay, sorry to interrupt, Bonnie.
No worries. So if you do have any questions about some of the information, feel free to contact the SISIP office. We're here to service you. Even if it's just to double check to make sure you're claiming the right deduction, we can never give you a 100% answer unless we know your current situation, but if it's just a general inquiry, we can certainly help you out. So just stop by the office or give a call. Check out our website. We have a lot of information there as well.
Excellent.
Okay. Any other questions maybe that you didn't get a chance to answer?
Health and feed.
All right, so like I mentioned before, I'm considered a deemed resident.
Okay.
I'm a Canadian Forces personnel posted to Peterson Air Force Base in Colorado Springs.
Okay.
I'm wondering, I've been on a few tax programs, and a lot of them don't offer deemed resident status. I'm wondering, do you have anything or know of anything that I can do from home?
Yeah, I've heard this before. To be honest with you, I use a professional software, so I'm not really familiar with the box software that's out there. And to be honest, I don't really understand why that would be a problem, because as a deemed resident, you're still considered a Canadian citizen, just you're not claiming a provincial tax return. But to be honest with you, I'm not sure offhand what software would offer that.
I also have 2 T4s.
Yeah,
right?
That's okay, yeah.
Like, I've been in the military a lot of years, but line 10, province of employment, one says Ontario and one says ZZ.
Yeah, ZZ is just out of country, but you're identified as a deemed resident, so that shouldn't be a problem. Have you checked TurboTax?
I can't buy it here. That's my problem.
Okay. You can't. No. What about going online?
I haven't tried that one.
Okay.
I usually use NetFile
or
H&R Block, but H&R Block doesn't work.
Right. Yeah, just because of the deemed resident. Or what you could do your taxes by hand.
Yeah, I think I'm too slow to do it by hand.
So, Joanna, was that session recorded?
Sadly, it wasn't used through this system. It was done using a different virtual program, and it was recorded, but the recording was only available for 7 days. For those of you, what we're talking about is just recently, and this was actually out of Colorado Springs, there was a webinar regarding out-can taxes, because it is very different for our members, and especially for their spouses, because the members are considered deemed residents, but most spouses are considered factual residents, and so it gets a little confusing. But so sadly, the recording is no longer available. But we were told that there was a SISIP rep that if you call the 1-800 number and say that you're on OutCan, there is somebody in the Ottawa office who is supposed to be more familiar and will work with you.
Yeah, absolutely.
And when we were there in the States, we filed it by hand because we couldn't find any software that would let us do it. So we ended up doing it longhand too. Sorry.
One more question though. My wife was considered a deemed resident out in the States here.
Yeah.
Make sure you have something from CRA. There's that Schedule 73 or something. I can't remember what it is. Schedule 74. There's some form that you have to have from CRA stating that they are saying you're a deemed resident, or you are a factual resident, or you're a non-resident. If you don't have that, they can come back and say, "Oops, you shouldn't have been a deemed resident. You filed incorrectly, and now you owe us $20,000 or something crazy like that." So
the way that
it would be really great then to connect with the SISIP, the OutCan SISIP person to help out.
Yeah. The way that I have filed for my OutCan clients is simply indicating they're a deemed resident. In the address, and this is the most important part, is in the address you don't actually indicate your mailing address where you're living overseas or in the States. You actually put the Belleville or the P.O. box for the military. That's a flag to them that you're a deemed resident, that you're military personnel working outside of Canada. And that avoids most of the problems. A lot of the issues that I've seen are because members have put their actual mailing address, and that indicates to CRA that you don't live in the country.
You do it for some CAF personnel from OutCan?
Lots, yeah.
Now, how do I contact you to see if you could do mine?
So if you go onto the SISIP website, there should be, so I'm based out of Kingston.
Do you want to share the SISIP website and we'll go see if we can find it, Bonnie?
Okay,
Probably.
so if you go to Contact Us, you can just contact the 1-800 number here where it says Head Office, and contact them and indicate that you have an outcan tax return, and then they will help you out there.
So I can call that number, and they'll give me a SISIP representative to help me out?
Yes. Typically, our tax return, the tax return service is part of a financial planning service, but I think if you explain to them, they might have some other resources for you, but I would call the 1-800 number to find out exactly how that works.
Okay, thank you.
You're welcome.
Wonderful. Thank you so much, Bonnie. Are there any more questions? And tell me about this link, Joanna. Joanna, just put a link in the chat.
Yep, so based on negotiations with CRA this past year with Military Family Services US, we put together just a little mini recording that just sort of breaks down filing taxes while you're in the US with CRA. So it's just like an informational recording.
What a phenomenal resource. Thank you.
Perfect.
All right.
But it is the CRA, so this information could change at any time.
So if there's no more questions, I just want to give Bonnie Nacarado a huge thank you. You've been very informative, and the SISIP program has been very well appreciated. Next Tuesday, we're going to have CF1 all about it, how to get it, and how to maneuver the website. And then the following week, it's all about mortgages. So, and then after that, we're doing home staging. So anything's possible in a virtual classroom. Thank you, Bonnie, for coming out.
Thank you for having me.
Thank you, Bonnie. Thanks for
you.
your information.
Absolutely. Anytime.
And Joanna, what did you like about the CF1 program last year presentation?
Just really informative. We just had no clue how much was available to us, and absolutely for those of you stationed in the United States, the discounts that you get for Armed Forces Vacation, Government Rewards Travel, all those websites, not only do you have access to them, but you get great discounts too. So they're partners with, they're U.S. partners with CF1.
Where's the CF1 presentation?
It's going to be here in this virtual classroom next Tuesday night.
Oh, perfect. Okay, great.
What time Tuesday?
6:30 p.m., same time.
Oh, yeah, sorry. I'm a couple hours behind you.
Okay, right, 6:30 p.m. Eastern Standard Time, 5:30 Oklahoma. And to exit out, you just click on the red X on the top right-hand side of your screen.
Thanks, Bonnie. Thanks, Margaret.
You're welcome.